Hello, welcome to ACCA Masters. I am your teacher Athar Aziz and it's our first lecture on the paper F8 Audit and Assurance. First of all, we will see the basic difference between audit, attestation and assurance. These are three separate words and we will see them one by one. First of all, let's talk about audit. We know that the management of the company prepares financial statements each year. Financial statements. But the shareholders of the company need confidence on these financial statements. For example, they want to make sure that these financial statements are in accordance with the accounting standards and these are presenting factual figures and there are no material misstatements, omissions, fraud or anything else in these financial statements. So that's why they appoint an external auditor. Now the external auditor checks the reliability of these financial statements and issue a report that either the financial statements are presenting true and fair view. Fine. And now this audited report adds credibility to these financial statements. Now after this external audit, the stakeholders of the company are more confident over these financial statements. Most of the listed companies legally required audit of their financial statements. But if we talk about attestation, then these are usually voluntarily. For example, a company has prepared cash flow projection just to get more loan from bank. Now bank may consider that either they will actually have these cash flows in future or not. In this case, the bank may require the attestation of these projections. So these are different than the audit. In the last, we have assurance. Now, audit is also a type of assurance, but it's a highest level of assurance. Like in the case of audit, we have here some financial data which we are required to audit. But here in this case, the subject matter can be financial, non-financial, or it may also be any kind of behavior. For example, any company is going to announce the result of any lottery. Now the participants may suspect the intentions of management, so they may require an independent practitioner who monitor this whole process. So now the lottery results will be more credible. So we can say that audit, attestation and assurance services add credibility to your reports. Now if we draw a diagram, then we can see audit covers only this area, while if we talk about attestation, then it covers more than the audit. For example, we can cover internal audit processes, we can cover here any future cash flows projections or any other kind of projections. And if we talk about assurance, then it covers more than both of these, and it covers financial plus non-financial and many other things. So it may explain you a better picture of it. Here we have two levels of assurance. The first is reasonable assurance and the second one is limited assurance. In the case of reasonable assurance, we perform more procedures, we perform more testing here, and that's why we also requires more evidence because the level of assurance is higher than the limited assurance. And in the conclusion, we give some positive form of words. But in the case of limited assurance, the tests or procedures we perform here are limited than the reasonable assurance. But those procedures should be adequate to reach at a meaningful level of assurance. And in this case, if we talk about the conclusion, then it's usually negative form of words. Okay, so now it's time to discuss some more concepts. Okay, according to ISA 700, ISA is different than IAS, which we talk in financial accounting. Those are international accounting standards, but it stands for International Standards on Auditing. Okay, so according to ISA 700, this standard deals with the auditor's responsibility to form an opinion on the financial statements, and this standard also tells the form plus content of the auditor's report. When auditor audit these financial statements, auditor then after auditing it provide an report that either the financial statement are free from material misstatement and giving true and fair view. Auditors need to perform some procedures, and in these procedures they try to get evidences wherever possible. And in case the financial statements are presenting true and fair view, then the auditor will issue a report which is known as unmodified report, that according to us financial statements are free from material misstatements and presenting true and fair view. Now if I talk about evidences, then the evidences can be either persuasive or conclusive. Now remember here one thing, the auditor cannot give at any cost absolute opinion. And when I talking about absolute opinion, then it's mean auditor can never guarantee about his opinion on these financial statements, because it's impossible to check 100% transactions of company. So some degree of risk always remain there. Now the evidences can be persuasive or conclusive. If I talk about conclusive evidences, then these are the evidences which we cannot deny at any cost. For example, if we talk about the registration of the company, when any company registered itself initially, then it do some paperwork, and that paperwork or that documents can be referred as conclusive evidence because it's based on facts and we cannot deny it. But if we talk about persuasive evidences, then these are such an evidences which influence someone to believe that something is true. For example, we are not getting any evidence related to fraud, so we can say that according to the available evidences, the financial statements are giving true and fair view, or these are free from material misstatement. Okay, so we are frequently talking about true and fair view. True mean information is factual and conform with reality. Transactions in the financial statements are not dummy transactions. Everything is real. Fine. And if we talk about fair, then the information is free from discrimination and biasness. Fine. So presenting any financial statement fairly means the financial statements show a true and fair view, they are factual and free from biasness. Now if I talk about the structure of audit report, then first of all we get opinion paragraph in which we tell that either the financial statements are free from material misstatements or not, and either these are giving true and fair view of the company. After that, we have basis of opinion paragraph. In the basis of opinion paragraph, the auditor tells that we perform audit according to ISA's International Standards on Auditing, and according to the evidences we obtained. In the light of these evidences, we form this opinion, which we mentioned in opinion paragraph. Now, if I talk about key audit matters which come after basis of opinion paragraph, then in this paragraph auditor discuss about most significant matters related to the audit. After which we have two more paragraphs, management responsibility paragraph and auditor's responsibility paragraph. In the management's responsibility paragraph, which says that management is responsible for preparing these financial statements, and in the case of any liquidity issue or going concern issue, then the management should disclose it separately, and also the financial statements should be prepared accordingly. And in this last paragraph, the auditor tells its own responsibility related to the audit of these financial statements. I will strongly suggest you to read this full auditor's report from the book. At the end, we have the concept of materiality. A matter is material. Matter is material if its omission or misstatement can influence the decision of user. Okay, one more thing, we have these 5 elements of assurance engagement. We will talk about it one by one. The subject matter is evaluated against any criteria, any specific criteria, so that we can reach to any conclusion. Report. After evaluation, the practitioner can give any opinion. This opinion can be a reasonable assurance or it can be limited assurance. Evidences. Sufficient and appropriate evidences should be obtained to reach at the required level of assurance. Then we have subject matter. Okay, so here we see we have a subject matter and we evaluate it against any criteria. Now the subject matter is not necessarily to be a financial thing, but it can be a non-financial thing also. For example, if you are buying any car or if you are buying any home, you can ask to any independent party or practitioner to evaluate it for you. For example, if they are meeting your minimum criteria needs or not, right? Three-party relationship. Okay, so we have this party, responsible party, and practitioner. Okay, in the last we have three-party relationship. For example, the one who is intended user of your report, responsible party for making it, and the practitioner who is giving any report or who is evaluating the subject matter. So that's all for this lecture. See you in next video.